Hi everyone, I am Sharadhamani, Assistant Professor, Department of Commerce. Today we discussed about allocation, asset allocation. Okay, in asset allocation is an implementation of an investment strategy that attempts to the balance risk versus rewards by adjusting the percentage of each asset in an investment portfolio according to the investor's risk tolerance, goal, and investment time frame. The focus is on characteristics of an overall portfolio, such as strategy contrast with an approaches that focus on an individual assets. Okay, many financial experts argue that asset allocation is an important factor in determining the result for an investment portfolio. Asset allocation is based on principle that different assets perform differently in different market and economic conditions. For example, in asset allocation, having international equity, international small cap equity, a small cap male value, small cap growth, attract alternatives, core fixed income, international small cap equity, and large cap value, large cap core, it's and growth. These all consider under the asset allocation. Although risk is reduced as long as correlation are not preferred, it is typically forecast that existed over some past period. Expectation for the return are often derived in the same way. Studies of those forecasting methods constitute an important direction of an academic research. When such backward-looking approaches are used to forecast future return or risk using the traditional mean variance optimizing approaches to the asset allocation of modern portfolio theory. The strategy is in fact predicting future risk and return based on history, as there is no guidance that past relationship will continue in the future. Asset classes are traditional classes. The traditional classes are stocks, bonds, and cash. Stocks value, dividend, growth, or sector specific or friend marketers. Bonds are investment grade or junk, government, corporate, short term, intermediate, long term, domestic, foreign, emerging markets. Cash and cash equivalents. Allocation among these three provides standing points, usually including our hybrid instruments such as convertible bonds and preferred stock, counting as a mixture of bonds and stocks. Alternative assets, that is commodities, insurance, product, annuity, life settlements, cross bonds, personal life insurance product, etc. Diversification and such as options, collateralized debit and futures. Foreign currency, capital venture capital, private equity, distressed securities, infrastructure, huge funds, etc. Okay, and allocation strategies are, these are several type of allocation strategies based on investment goals, risk tolerance, time frame, and diversification. The most common forms of asset allocation are strategic, dynamic, tactical, and core satellite. Okay. Statistical asset allocations are, the primary goal of asset allocation is to create an asset mix that seeks to provide the optimal balance between expected risk and return. Okay, and dynamic asset allocation is, it is similar to strategic asset allocation in that portfolio or built by allocated to the asset mix that seeks provide the optimal balance between expected risk and return for a long term investment horizontal. Tactical asset allocation is strategy in which investor takes a more active approaches that tries to a personal portfolio into this assets, sectors, or individual stocks that show the most potential for the gains. Okay, in in some problems or in asset allocations are investor behavior is inherently based. Even though investors choose an asset allocation, implementation is in the charge. Investors agreed to asset allocation, but after some good returns they decided that they really want more risk. Investors agree to asset allocation, but after some bad returns they decided that they really want less risk. Investor risk tolerance is not knowable ahead of time. Security selection within asset classes will not necessarily produce a risk portfolio equal to the asset class. The long run behavior of asset class does not guaranteed with their small term behavior. Thank you for watching.